everyone, welcome back. This is video number 4 in our Student Finance mini series, and as it says on the screen there, video 4 is all about how repayments work. Okay, so let's assume that you have taken out a tuition fees loan and you've taken out a maintenance loan. Those go together to form your student loan. So despite popular belief, you don't apply for a student loan. A student loan is not a thing. A student loan is your tuition fees loan plus your maintenance loan put together, and that's what you chip away at in terms of your repayments. And just to reiterate, anything that's really labelled a grant, bursary, a scholarship, an allowance, generally you don't have to pay those back. So hence why those aren't lumped together to form your student loan. So repayment of your student loan. You will only start repaying your student loan when 2 things happen. The first is when you are earning over £26,575 a year. That is before tax, so your gross income. The reason why there are 3 other figures on the screen there is it's actually gone up a few times in the last couple of years. It was £21,000. It then went up to £25,000. It then went up to 25,725, and as it stands today, it is currently 26,575. So that's the amount of money you can earn before tax, before your repayments kick in, and they kick in the April after you graduate or you leave university. So there is usually a delay between kind of the summer graduation typically and then the April after. Don't make the mistake I did and think that student loans company forgot about you because you weren't making contributions despite the fact that you were working, and then April comes, boom, there's your first payment.
They'll send you the letter, won't they? They'll definitely let you know.
They'll definitely let you know. They haven't forgotten about you.
Knocking on your door.
Yeah.
Repayments are always dependent on your income. We'll look at a few examples in a second to kind of put it into perspective. They are deducted automatically through HMRC, automatically from your pay. So if you're employed, that money will be taken before it reaches your bank account. Yes, if you are self-employed, you are still liable and you still have that figure of 26,575 to be mindful of. You just do it a slightly different way in terms of your tax returns. Monthly repayments are not affected by the amount you've borrowed, which doesn't sound like it makes sense. It's like goes against common sense, but wait until we see how it's actually calculated, and it will make more sense. Having a student loan will not affect your credit rating, which is obviously the case with kind of private loans and credit cards and that sort of things, but it's not the case with your student loan. Liability to repay is not passed on to someone else in the event that you die. Bit morbid, I know, but that is the case with private loans in some cases, so it's good to know. And the golden nugget piece of information, not only in this video, but the whole 5 videos. Sorry, Liam, I don't mean to poo-poo your contribution here, because video 5 is all about you. But after 30 years, any outstanding repayments will be written off. Any outstanding repayments will be written off. And that's such a significant statement because it's led a lot of people to believe that actually most students going to universities these days, including yourself, Liam, won't pay everything back within that 30-year terms. And if you don't believe me, here's one example, here's one case study. So the Institute of Fiscal Study estimated that 83% of students will not clear their student loan within that 30-year term. And in fact, if you see there on the URL, that was released in October 2017, and that was a prediction when the repayment threshold was jumping from £21,000 to £25,000. As we've seen in the previous slide, it has gone up twice more since then. So that figure is actually probably on the low side. And if you're interested, the same report calculated that at the £21,000 threshold, only 77% wouldn't pay everything back. So all I'm trying to say is you're probably, statistically speaking, you're probably not going to pay everything back that you borrowed to go to university in the first place. And we'll come back to that in a second. So repayment examples. I don't want to turn this into a maths lesson. Liam said that he only recently got out of a lecture, so I'm not going to strain your brain too much, but it's important to know how it works. So repayment rate is 9% of earnings above that magical current figure, 26,575. And here's a few examples for you. If you are earning £30,000, say, that would equate to £25 repayment of your student loan a month. Can you make additional voluntary repayments without penalty? Yes, you can. This is the minimum amount here. So for instance, if you're on 26,575 exactly, you're not responsible. It's only when you go a full pound over that 9% is then applied to that full pound. And the reason why these figures are probably a little bit lower than you may have thought is because you're not paying 9% on your full salary of £30,000, for instance. You're paying 9% on the amount above the threshold. So in the £30,000 case, you're not paying 9% on £30,000, you're paying 9% on 3,425. Hopefully that makes sense. Interest rates do apply. They are charged to your student loan. No more than the retail price index, I believe RPI stands for, +3, and they apply from the date the first payment is made to either you or your university. I am breezing past this primarily because most people believe that students won't pay off their student loan as it is. The fact that interest is being added onto that only increases the likelihood of you not actually paying everything back. So let's have a look at some examples very, very quickly. So putting numbers on a screen is helpful, but we can do one better. Imagine the left there, that's the April after you graduate. On the right there, hopefully it's displaying properly on your screen, is the 30-year timer that we referenced before. Imagine your first job out of university, you're on £20,000 before tax, and you do that job for 10 years. Because £20,000 isn't above the repayment threshold, you are liable for repaying nothing within that 10-year period. Could you make voluntary repayments? Like we said, yes, you can, but we're going to assume for this example you don't. And that's fine, you're allowed to do that. Okay, for the next 10 years of your life, you earn £30,000. Maybe you get another job or a promotion, I don't know. You do that job for 10 years. We're above the threshold now. Within that 10-year period, you will pay back £3,000. I stress that's £3,000 within that entire 10-year period, not a month or a year, within 10 years. And then I know life is not this regimented, but bear with me. The last 10 years, you then earn £40,000. You get another promotion. Congratulations. Again, it's above the repayment threshold. So how much would you pay back? £12,000. Again, not a month, not a year. That's within that entire 10-year period. And this is assuming that you don't take a break from work, career break, paternity, maternity leave, that sort of thing. And then ding, we're at our 30-year timer. That's £15,000 you would have paid off, or £500 a year. Now, I said in video 2, I think it was, the amount that you are charged, the price tag is one thing. This is actually what you should concern yourself with. This is how much you actually pay off. Okay, so in this example, with this profile, you would have paid off £15,000, and we can do another calculation. Let's just imagine after university you earn £30,000 for 30 years non-stop, no breaks. You would have paid off £9,000, which isn't even 1 year's tuition. So please, the price tag of university is one thing that will get all the political attention, but actually the amount you pay back, and Liam, you should be listening in with this one as well, because this applies to you. The amount you pay back is a much more significant figure, and that's what you should concern yourself about. Okay, so hopefully that made sense. Please join us in video 5, where I will be picking Liam's brains about his experience of university and student finance.